I'm doing some here to show us you about my stock account. Today, my stock account has made a gain of $1,200. U.S. stocks closed lower on Friday, and the Dow and S&P both posted their second straight week of declines. JPMorgan survey said U.S. default will spur Treasury rally and dollar weakness. In my account today I've gained a PL of 1.69%. Right now, the net asset of my account is $72,320.27. And today, United Natural Gas made a gain of 3.91%, rising to 6.64. Today, Dow Jones Industrial Average closed down 0.03%, and Nasdaq Composite closed down 0.35%, and S&P 500 closed down 0.16%. Both the Dow and the S&P 500 posted their second week of loss. Markets continue to focus on the U.S. debt ceiling crisis. The University of Michigan's Consumer Confidence Index was lower than expected in May. Dow fell 1.1% for the week, and the S&P fell 0.29% for the week, both marking their straight week of losses. Nasdaq rose 0.4% for the week, its straight week of weekly gains. Tesla shares closed down 2.4%. CEO Elon Musk said on Thursday that he will step down as the CEO of Twitter, but will oversee the social media company products. Investors remain concerned about the U.S. debt ceiling crisis. A scheduled Friday debt ceiling meeting between President Joe Biden and congressional leaders was reportedly postponed until next week. The White House said on Friday afternoon that congressional workers will continue their talks on the debt ceiling over the weekend. U.S. Treasury Secretary Janet Yellen said on Friday that payment priorities proposal. Analysts say this suggests that the Treasury may default directly on its debt if it runs out of money. The Independent Congressional Budget Office said June 15th avoided the end of July, but the lack of available funds in the first 2 weeks of June remained a significant risk. Ms. Yellen has previously said there was uncertainty about whether when the Treasury would run out of cash. She also noted that there is no good solution on the debt limits beyond raising the debt ceiling. For now, the Republicans are determined to see the White House hand over the spending cuts. Mary Jacket Cardone, chief executive of Edmund de Rothschild Asset Management, said, "We believe they'll reach an agreement. We need to remember that negotiations are just beginning. The political confrontation may intensify before an agreement is reached, but we believe a compromise will be found." The weaker than expected producer price index, indicating falling inflationary pressures in the U.S., failed to ease investors' concern about future recession, especially as the U.S. stock market is supported by a handful of stocks. Consumer price index released on Wednesday showed that the U.S. inflation continued to fall in April and was slightly below market expectations. The CPI data improved as investors' concerned that the Fed will raise another rate hike in June, but also suggested that the U.S. recession could be around the corner. JPMorgan analyst Jason Hunter said, "This is a pretty typical story. The market leaders are weak, and then when growth slows to a certain level, soon real cash out." On Friday's economic data, the U.S. import price index rose 0.4% month-on-month in April, compared with 0.3% expected and negative 0.6% last month. The import price index fell 4.8% month-on-month in April, up from negative 4.8% expected and negative 4.6% expected last month. University of Michigan's preliminary consumer confidence index for May came in 57.7 versus 63 expected and 63.5 expected last month. Institutional investor survey by JPMorgan expect that if the current debt ceiling crisis triggers a technical default, the yield curve will flatten, with higher rated credit spreads widening and the dollar falling against other safe haven currencies. JPMorgan analysts, including Jay Berry, said in a report to clients that the survey was conducted between May 9th and 11th and received responses from 123 institutional investors. On Treasuries, 61% of respondents on average expect the 2-year yield to fall 18 basis points, and 67% expect a 22 basis point drop, meaning the 2 to 10-year yield is flat. On credit debt, 99% and 97% respondents expect an average of 44 basis points and 66 basis points respectively. On the foreign exchange front, 78% of respondents expected a depreciation of 2.6% against the yen, and the Swiss franc, 72% expected 1.7% against the dollar and the euro. According to the survey, consensus was that the spread between secured overnight financing rate and the reverse repo rate will only widen moderately, with an average of 91% saying the spread has widened by 6 basis points. There is no strong consensus about how short-term swap spreads will perform, with 55% of respondents expecting to expand, with an average of 2 basis points. That's all I have for today. Thank you for listening. Don't forget to subscribe and like. See you next episode.